Hey guys, my name is Evan and welcome to Evanomics 101, your number one source for everything econ. What if I told you that the biggest threat to America's AI dominance isn't a better AI? It's a cheaper one. So for years, the AI race has been about building the smartest model with the biggest data centers and the most powerful chips. But now Chinese AI companies are changing the rules by offering low cost AI models. So today we're going to break down why Chinese lower cost AI strategy could reshape the technology industry, who wins and who loses if AI becomes a commodity, and what this could mean for the Federal Reserve, financial markets, businesses, and consumers. Before we jump into the video, I do have a quick favor that really helps grow the channel. If you enjoy simple economic breakdowns like this, please hit the like button, share, and subscribe. Now let's go ahead and jump into the video. So, the biggest misconception about AI is the company with the smartest model automatically wins. And history should suggest that's not always the case. So, sometimes the winner is simply the company that offers something that's good enough at a much lower price. So, you think about like cell phones or like solar panels. Lower prices often expand the market dramatically. Now, now we've seen similar strategy. Now we're seeing a similar strategy in AI. So Chinese firms are releasing open weight or low cost AI models that perform well enough for many business tasks while costing a lot less. So this changes the economics. If companies can save millions of dollars on AI expenses while maintaining a higher level of performance, many are going to choose the low cost option. And that leads us to the next question. How are they making a lower cost option or an alternative? There isn't one single reason. It's a combination of engineering, competition, and business strategy. But many Chinese companies or many Chinese AI developers emphasize efficient model architectures, open source and open weight releases, and aggressive pricing. Instead of maximizing short term profits, several companies appear focused on expanding adoption. Some models also require few computing resources, reducing operating costs while remaining competitive for coding and enterprise workflows. That doesn't necessarily mean they're the absolute best. Many experts still say leading US models remain ahead of certain advanced capabilities, but in economics, perfect isn't always necessary. If an AI model costs substantially less while solving 90 to 95% of business problems, that becomes an attractive option for many organizations, which raises another important question. Who actually benefits? The obvious winners are businesses. So lower AI costs mean lower operating expenses. Small businesses that previously could afford enterprise AI suddenly have access. Startups can build products with much smaller budgets. Developers can experiment more. Consumers may eventually see cheaper software subscriptions, better customer service, faster innovation, and AI integrated into more products. So economists call this a productivity gain. When companies produce more while spending less, productivity rises. Higher productivity can increase economic growth while putting downward pressure on cost over a period of time. So that's why investors pay so much attention to technological breakthroughs. But not everyone is going to win. Companies charging premium prices may face pressure. So margins could shrink, competition becomes more intense. That's especially important for investors following AI stocks. So we're going to pause right here, guys. If you want more breakdowns like this that connect economics, markets, and headlines, please hit the like button, subscribe, and share this with somebody who's into this kind of content. Now let's jump back into the video. So let's talk about markets. So Wall Street has poured hundreds of billions of dollars into the AI boom, if not trillions. Companies building chips, cloud infrastructure, of course, data centers are in the headlines a lot nowadays, but you also have software and AI applications have all benefited. If AI suddenly becomes much cheaper, there are two two competing forces that you're going to be dealing with. So the first one is going to be lower prices could pressure some company profits. And the second thing, lower costs could dramatically expand demand. Economists call this the demand elasticity. When prices fall, more people buy. That means AI usage could explode across multiple industries. Instead of fewer AI companies making huge profits, you could have millions more businesses using AI every day. That would create winners across software, consulting, cybersecurity, manufacturing, education. Markets would likely shift, not necessarily shrink. Now let's connect the broader. Now let's connect all of this to the broader economy. So if AI lowers business costs, improves worker productivity, and automates repetitive tasks, it could reduce inflationary pressures over a period of time. That's important because the Federal Reserve constantly watches productivity and inflation when deciding interest rate policy. Lower production costs can help companies avoid raising prices. If inflation eases while productivity improves, that creates a healthier environment for long term economic growth. So consumers also stand to benefit through lower software costs, better digital services, and more personalized tools. But there are risks also: security concerns, intellectual property disputes. Um, Analysts note that where AI models are hosted and how they are deployed can matter as much as where they were originally developed. So this story isn't simply about technology; it's about economics, competition, national strategy, and the future of global business possibly. So the biggest takeaway from all of this isn't necessarily that China has built the single best AI. It's that lower cost, increasingly capable AI has the potential to change how businesses make technology decisions. History shows that affordability often drives mass adoption. If that pattern repeats in AI, the economics effects could be huge. Now, I want to hear from you. Do you think a cheaper AI is ultimately good for consumers, or does it create bigger challenges for American technology companies? Leave your thoughts in the comments below. And if you enjoyed this breakdown, please don't forget to hit the like button, subscribe, and share. And remember, this is Evanomics 101, your number one source for everything econ. I'll see you on the next video.